Okay, guys, welcome to another weekly market review session. Let's get straight into it. So again, number one, let's have a look at how the charts are. So we can see over here, we are on my S&P 500. We are on the hourly chart. And very simply, you can see for number one, I've drawn this little triangle over here. Currently, we are at Monday at 10 p.m. over here. So market has officially opened. And you can see this triangle that I've drawn so far, our SPY is actually breaking over here. Right, breaking over here, going below my triangle. Okay, so if it continues to stay below this, again, possibly we may have a slight bearish movement down. Okay, now if you zoom out a little bit more, okay, you can see there is a long-term uptrend line over here. Okay, and as you saw just now, our price broke my triangle. So if it continues to make its way down all the way and it breaks my trend line over here, roughly around 440, 439, if it breaks those levels, then likely it may continue downwards. All right, and when that happens, I will turn bearish on the market for the short term. Okay, and possibly do some short term bearish trades for myself. Okay, so looking at the markets now, very simply again, it is going sideways for the month of September. Okay, this long-term uptrend line on the hourly, if it breaks below it, then possibly further move to the downside. Okay, already, as I showed you just now, it has already broken my triangle over here. Okay, if I draw one triangle here, and I draw the other one over here, already broken down for itself. Okay, so very, very important that we continue to observe this. Okay, so if it breaks 440, 439, further downside, then you should turn bearish for yourself. Okay, even if we look at my EMA, okay, my EMA, you can see, guys, basically for the month of September, this is the month of September so far, it has been entirely choppy. So not the easiest month to trade. Okay, typically for September, either if it has typically it tends to be a bit more choppy, so it isn't the easiest month. If you're going for trades, then either number one, quick in and out, or number two, just sit on the sidelines for yourself. Okay, so that's how the markets are looking like for this week. Okay, S&P 500 so far. So continue to observe that level. If it drops below that, then maybe a bearish play. Okay, I am still optimistic on the markets. Again, typically it should be moving towards bullishness. Why do I say this? Because of seasonality. Okay, because of seasonality. So if we go to seasonality, we go to the S&P 500, we look over here, you can see very clearly towards the third week of September, typically the market starts to rally for itself, okay, and starts to go up. But we haven't had any such luck so far when it comes to the markets. You can see it's still chopping sideways, all right, literally going in this fashion. Okay, so again, I'm still bullish, but so far, with the breaking of my triangle, and if it continues down, breaks the 440, 439 level, okay, somewhere around here for yourself, if it breaks somewhere around this point, then it can be further downside. All right, further downside. So take note of this. Okay, but hopefully it holds, it doesn't go any lower, and it does go back up. Okay, if not, then below 439, please turn bearish for the short term. Okay, so this is SPY and how the markets are doing. Now, in terms of Forex Factory, have a look. Okay, this week, important, very, very important. Thursday, September 21, 2 a.m. Okay, over here in Asia. Look out for this because this is interest rate hikes. And we all know, with hiking of interest rates, or even if they decide to keep it constant, whatever Jerome Powell says will move the markets and cause volatility. Okay, so this is something very important. We got to pay attention to this. Important for us to take note of this important economic event, because how this turns out, there will be volatility in the markets. Okay, for those of you who are trading on Wednesday, just be careful. Markets may not move as much because everybody is anticipating interest rate hikes. Okay, and Friday we have manufacturing PMI index that is coming out. Okay, so this, for those of you who are day trading, be careful of this. Just stay aware of this high impact event. All right. And with that, honestly, that is it for the market review. Okay, so nothing else, nothing much left. Okay, you can see on my daily chart, really for the month of September, it's just been a choppy market. Okay, literally just going choppy for itself, going sideways. So I hope that we break out of this soon. Either we have a clear direction to the downside or to the upside. Like I said, take note of those 439, 440 levels. If it really breaks past hard in those levels, it's going to go bearish. Okay. And yes, all right. With that, there's nothing else for this weekly market review. Just stay tuned to this. If you're really not confident of your trading, then stay on the sidelines. If not, please go in and out very quickly. Okay. So with that, take care, stay safe, and have a safe trading week up ahead.